What's up, family? Andre here. In the recent news, there's been a lot of discussion about the child tax credit that is a part of the America Rescue Plan signed by President Joe Biden. On today's episode, we're going to break down what is the child tax credit, the thresholds that you can be able to qualify for the child tax credit, and other details that can impact you and your money. Before we get started, if you would be so kind as to smash that like button, hit the subscriber button so you can get updated weekly content from my channel. Over the last several weeks, there has been a lot of discussion about the child tax credit. This is an extension of the America Rescue Plan of 2021 signed into law by President Joe Biden. Today's episode, we're going to break down what is the child tax credit, all of the different income thresholds, when those child tax credits are phased out in 2021, and how they may revert back to 2020, and other details that can be impacted by you and your money. But first, let's understand what is the child tax credit. The child tax credit is a tax benefit that has been granted to the American taxpayer for each qualified dependent child. It is designed to help the taxpayer support their families, but this credit has been greatly expanded through the America Rescue Plan of 2021. It is estimated that this new child tax credit will reduce the U.S. poverty rate by 45%. This new child tax credit also, once implemented, will decrease the taxpayer liability dollar for dollar. Here are some of the critical details for the new child tax credit. The recent legislation increased the maximum annual credit from $2,000 per child under the age of 17 in 2020 to $3,000 per child under the age of 18 in 2021, or $3,600 for children under the age of 6 in 2021. While the tax credit in 2020 was partially refundable, the 2021 child tax credit is fully refundable. In addition, there will also be advance payments of the child tax credit that will be available to taxpayers in monthly installments beginning in July of 2021. Taxpayers that are planning to claim the child tax credit for their tax returns for 2020 in 2021 should acquaint themselves with the special look-back provision that is included in this legislation that was designed to compensate people who lost income due to the COVID-19 pandemic. In preparing the tax returns for 2020, taxpayers should compare the child tax credit that was received in both 2019 and 2020 to determine which year provided the greatest benefit for child tax credits. The refundable portion of the child tax credit, called the additional child tax credit, is based upon a taxpayer's annual income. Because many taxpayers had a lower amount of income in 2020 than in 2019, this special look-back period allows for the taxpayer to determine the amount of tax credit in 2020 based upon their 2019 earnings. One of the important changes that I mentioned with this new legislation is the form of advance payments for child tax credits that will be available to taxpayers starting in July of 2021. The breakdown of those advance payments is as follows: $250 per dependent qualified child under the age of 18, or $300 per dependent qualified child under the age of 6. Let's take a look at how the child tax credit works for the individual taxpayer. The 2021 changes to the child tax credit was as a result of the America Rescue Plan of 2021. These are vastly different than the child tax credit that was in 2020. But keep in mind that this legislation that was signed in 2021 is only for 2021. It does not carry over into the next year. Unless further legislation is signed that will extend this into another year or add additional years to this legislation, these child tax credits and many of the provisions in the America Rescue Plan will expire at the end of 2021. For 2020, taxpayers could claim a $2,000 child tax credit per qualifying child under the age of 17. If that child tax credit exceeded the amount of tax owed, then the taxpayer would be entitled to an excess credit up to $1,400 per qualifying child. As I mentioned before, within this legislation, there is a special look-back provision that allows the taxpayer to compare their 2020 income versus their 2019 income. Many individuals were adversely affected by the COVID-19 pandemic, and their 2020 income was drastically lower than their 2019 income. This special look-back provision allows them to take the greater of the two incomes to claim the maximum benefit. The 2020 child tax credit is subject to a phase-out level at the rate of $50 per additional $1,000 above the high income threshold of the modified adjusted gross income, otherwise known as MAGI. MAGI is described as adjusted gross income plus any excluded foreign income. The threshold level is as follows: $400,000 for a joint return and $200,000 in other cases. Another key provision within this legislation allows the taxpayer to adjust their withholding if they're going to claim the child tax credit in order to reflect that in their monthly income, and or be able to adjust their installment payments that they may be making to the IRS for back taxes to reflect their child tax credit. For 2021, some of the key changes are that the age requirement for the child tax credit changes from under 17 to now under 18. The threshold limit also changes from $2,000 per qualifying child to $3,000 per qualifying child, or $3,600 per qualifying child under the age of 6. Also, the child tax credit in 2020, which was partially refundable, is now fully refundable. The credit phase-out remains the same as it has in 2020 for 2021. However, the thresholds are dramatically different than they were in 2020. For in 2020, the threshold was $400,000 for a joint return and $200,000 for all others. In 2021, that threshold has now changed to $150,000 for a joint return. For head of household, $112,500, and all others, $75,000. Under the new legislation, a family with an MAGI of $150,000 and qualified dependent children ages 3, 4, and 10 will receive child tax credits of $10,200 and advanced child tax credit payments of $850 per month. Assuming that all eligible taxpayers receive benefit payments for the last 6 months of 2021, they now will be eligible to claim the rest of the tax credit balance on their 2021 tax returns. Because the advance payments represent early receipt of tax credits, the advance payments are not considered taxable income. For taxpayers whose advance payments exceed their allowable tax credits, they will have to pay back any excess via their tax returns. However, there is a safe harbor provision within this legislation for lower income borrowers that fall into this category, where this is substantially reduced or waived. If taxpayers feel that their advance payments are too high or too low, they can make adjustments via an online portal through the U.S. Treasury. They can also elect not to receive advance payments and just use the child tax credit via their tax returns. They can also make adjustments to their wage withholding each month to reflect the receipt of their child tax credit in order to receive that in their monthly income. There are 2 ways that you're able to qualify for the child tax credit. Either one, be a qualifying taxpayer and or have a qualifying dependent child. Although the legislation is written for the child tax credit that focuses on taxpayers for the dependent biological children or stepchildren that they provide for, there is also provision that provides within this legislation for taxpayers that provide over more than half of support to other family members. They can also qualify for the child tax credit under this new legislation. A taxpayer may be entitled to credits with respect to showing that support for individuals that fall in the category of grandchildren, nieces, nephews, cousins, or other family members of extended family. They also may be able to provide information and evidence related to adopted or foster children that will allow them to also qualify for the child tax credit. One key provision in the child tax credit legislation that is important to understand is that only one taxpayer can claim the child tax credit. In a situation where you have a child that spends time at multiple households throughout the year, only one parent can be able to claim that child tax credit. In the situation where the primary parent has primary custody of that dependent child, they will be able to claim the child tax credits. The other parent will not be able to do the same for that same qualifying child. There are a number of ways to determine your eligibility as a qualifying dependent child under the child tax credit legislation. One of those ways is being able to determine your citizenship under the legislation. That would include being a U.S. citizen, a U.S. foreign national, or a U.S. resident alien. There is also dependence and age as well as residency requirements that are also a part of the eligibility for the qualifying child. In addition to the other thresholds that have been outlined in the Child Tax Credit 2021 under the American Rescue Plan, for both 2020 and 2021, taxpayers can claim $500 of additional tax credit for each dependent other than a qualifying child. So let's recap what is the child tax credit and the key provisions that are important to you and your money. For 2020, the child tax credit was $2,000 per qualifying child under the age of 17. In 2021, that changes from under the age of 18 and to $3,000 per qualifying child, or $3,600 for any child under the age of 6. The 2021 child tax credits are fully refundable, and advance payments of child tax credits will be paid to individual taxpayers starting in July of 2021 in the form of either $250 per qualifying child or $300 per qualifying child, depending on their age. Eligible children are legal dependents who are U.S. citizens, U.S. foreign nationals, or U.S. resident aliens. The child tax credit is designed to help low to middle-low income families and is phased out for many of the higher income families, starting at $150,000 for joint, $112,500 for head of household, and $75,000 for all others. These child tax credits were only being implemented and designed for 2021. Unless there is additional legislation that passes, these were set to expire at the end of 2021. However, within President Joe Biden's American Rescue Plan, there are provisions to be able to make these child tax credits permanent and extend them out to 2025. And that is it. Hopefully now you have a better understanding of many of the key provisions and details regarding the child tax credits of 2021 under the American Rescue Plan signed by Joe Biden. The key thing to keep in mind regarding these child tax credits is that it's important for you to be able to consult a tax professional that can be able to give you advice and guidance on whether you should be able to claim these child tax credits if you are eligible. It's important to understand the ramifications of whether you claim those or you don't, so that you know how it impacts you and your money. As always, before you go, please don't forget to smash that like button, hit the subscriber button to get updated weekly content. Thank you for tuning in.